Welcome. This is Stephanie Evelo here with the Evelo team at Keller Realty, and we are streaming live with the July 2023 monthly market update. We appreciate you joining us. We've been doing this each month since when, Bob?
Probably
Oh,
started in March or April of 2020. So
of COVID, our COVID days. So we've been trying to update our friends, families, valued clients, and future clients about the current market and conditions. So, Bob, take it away. What can you share and tell us about what's been happening? There's been a lot happening in the market. So, what's been happening?
absolutely, always hard to predict where things are for certain or where they may go. But we've been tracking several pieces of information for the last few years, and we'll just kick right into it. The first slide we have up is the median sales price for our market. So for the month ending June 2023, we ended at 295. That's down a little bit from where we were last month, but right exactly where we were last year. So kind of have settled off a little bit in terms of that median sales price and right in line with where we were last year. Next up is that cumulative days on market. Back when I started in 2013, the average days on market was over 100.
Right.
We still have a pretty low number. This is the median. So the midpoint between the high and the low was 8 for the month ending June. That was up a little bit over last month, which was at 7, and up about 60% over last year. But again, big numbers in terms of percentages because we're talking small numbers in terms of number of days. Last year, that midpoint median was at 5 days. So we're seeing things be on a little bit longer. Obviously, very price point dependent, location dependent, all those normal circumstances. Next up is that month supply of inventory. So that's a key thing we've been tracking. You can kind of see at the top here, the blue bar. A balanced market is considered anytime there's about a 5 to 6 month supply of inventory. The last time we were there was back in 2016. So
it's been a while. It's been a while, hasn't it?
Been a while. So we were.
And Bob, I was just saying, Bob, you've been with us for 10 years plus, right? So, I mean,
Yep.
you've seen this, we've all been experiencing this. So yeah,
absolutely. So we were at 1.2 month for the ending June. That was the same as where we were last year, a little bit of a tad bit of a difference with rounding. And that puts us up almost 30% over last year when we were at 1 month. So again, seeing a little bit of slow but steady increases on those factors. Last one up under this particular topic is we've been tracking that average list price to sales price ratio. So we're still right around 100% on average, coming in at 99.5. That's up just a tick from May. And then that is down a little bit from the heart of the summer last year when we had gotten almost to 102%. So that's kind of the 4 leading ones that we've been tracking each month.
Yeah, and I think it is interesting because so we're actually below the 100%, right? And yet I think that's where the buyers are still assuming that things are selling at the full asking price, and I think commonly they are, but it's all relative to where the seller prices it initially, right?
Yep,
and because
absolutely.
the price points you just saw on the previous slides that they're trending just ever so slightly down. That's where, yes, I think that, the sellers, we're trying to counsel sellers to really be cautious about not overpricing, right? Not overpricing to start. So, yeah. So what metrics have you been following to track the shifting market? Because I know everything's been shifting.
Yeah, so as things have kind of started to change going back into last year where they weren't just on a constant up, we started kind of monitoring a few other metrics just to kind of see if we can have any early warning signs of what changes might be coming in the market. First one up that we've been tracking there is the active inventory. So the larger the number for active inventory, that obviously means the more homes that are up for sale that are not yet under contract. So we ended June at 4123. That was up about 5% from last month and up about 6% from last year. So in general, that just means homes are staying on the market a little bit longer. Still haven't seen any real dramatic switches. Next up is closed sales. So for the month ending June, we were at 3,325 closed sales. That was up just a tick from May, But you can see that's where we really start to see a little bit of change there. That's down 18% over last year at this time in terms of closed sales. And then one final slide to take a look at on that front is the number of new listings. So for the month of June, we had just a little bit over 3,900 new listings, which is up a little bit over May. But again, another kind of early kind of warning sign or number to look at. That's down 26% in terms of the number of new listings where we were in June of 2022 when we were at 5,300 instead of 3,900.
Yeah. Wow. Yeah, those are some drastic changes and drastic differences, right? And just what is available out there in the market for buyers to look at and see. So what about interest rates? So thinking about buying, what do the interest rates look like?
Yeah, so
That's probably the top question that we get asked these days right now, right? Everybody's wanting to know what's going on with the interest rates.
Indeed. And obviously there's a lot of things that factor into what an individual's interest rate might be. But in terms of just looking at big picture averages, we take a look at this Freddie Mac data, and they do kind of a weekly survey and make the average mortgage rate. So this is for the week ending last week. So we are back on a bit of an upswing. The 30-year average interest rate now ending last week was just a tick under 7% at 6.96. That is up about a little bit more than a quarter of a point, 0.27% over where we were last month. And we had dipped down kind of into the into the high fives-ish, mid fives, in the last year. So we're a little bit higher again right now. Like anything, interest rates have their ups and downs. We definitely are on a little bit of an up curve now. And we'll just have to see what the next few months brings to see if we might go back on a little bit of a downward slope.
Yeah, and I heard someone just recently say, just date the current interest rate and get married later, right? So just talking about, the interest rates right now, if they choose to buy and lock in now, they can always refinance later when the rates adjust, which lots are anticipating that possibility of adjustment. So
Correct.
Yeah, so any final thoughts about the state of the market? What else is happening?
Yeah, we always try to conclude with something. This time, since we still have kind of low inventory in the market, I went with that crowd that might be out there wondering if it might be time to downsize. So whether you have kids that you raised in a large home and now they're all gone and you're an empty nester, or whether you just had a bigger home and you're considering whether it's time to maybe right size or downsize a little bit, still some opportunities for certain. I think if more people took this step that might fall into this category, that probably would help a little bit with our shortage and supply of inventory, and still enable you as a seller to take advantage of some favorable market conditions. So, keep in mind, it can help you, cut your monthly expenses going from a larger home to a smaller home. Your equity can definitely fuel your move, so to speak. So if you've owned your home in particular for 10, 15, 20 years, been there a long time, you probably have a significant cushion of equity that you've built up that can really help you, kind of fuel or fire up that move to the next home, whatever that might be. And so still just want to remind those people that might be kind of sitting on the fence, deciding whether that's the right time to make that move. Still some good opportunities there, and something we can definitely sit down and talk about if you've been thinking about it.
Yeah, well, thank you so much, Bob. We always appreciate all the information that you bring to us to be able to share, and with those that we want to be helping and assisting and making smart financial decisions out there in their real estate transactions. Well, we just thank you, Bob, for all you do. And we just want to thank everybody for joining us. And of course, if you have any questions or anything, and want to talk about any real estate needs that we can assist with, let's connect. You can always connect with us at info@eveloteam.com or 317-863-9011. Of course, we'll put those in the post here. And remember, as always, make each moment count. Thanks so much. Enjoy the summer day. Bye-bye.